see the global currency markets moving 24 hours a day, accessible from anywhere with a Wi-Fi connection. But for a trader in Algeria, that borderless promise can feel like a sudden crash into a physical wall. Trading Forex here is not a criminal act. There are no authorities knocking on doors for opening a price chart. Instead, you face a completely unmapped obstacle course. Success in Algeria depends on your ability to move capital across borders. While strategy matters, the first hurdle is simply getting your funds into a secure international account. Because the government has chosen not to regulate this space, they also will not protect you. To trade safely, you have to become your own strictest regulator. We operate in a legal gray area. Lawmakers have remained silent, with no specific framework that officially sanctions retail Forex trading, and no law that explicitly prohibits it for individuals. The Bank of Algeria oversees the financial sector, but their mandate is macroeconomic stability. They are focused on national reserves, not the individual trying to catch a breakout on the euro. Where their policy does intersect with your trading is through strict capital controls. These are rigid financial borders designed to prevent large sums of domestic currency from leaving the country. Operating outside a local framework carries a high risk. If you wire your capital to a fraudulent offshore broker, there is no Algerian consumer protection agency you can call to get your money back. This comparison table shows exactly what you are missing. On the left, we have fully regulated markets like the UK or Australia, and on the right, gray markets like Algeria. Notice the stark difference. While a UK trader enjoys direct banking pathways and government-backed insurance on their deposits, an Algerian trader is forced to use indirect market access and operates with zero local consumer protection. The true barrier to entry here is logistical. It's a funding freeze caused by capital controls, not a legal ban on trading itself. That brings us to your first actual test, attempting to send your initial deposit to a foreign broker. If you try to execute a direct wire transfer from your local bank account to an international brokerage, it will almost certainly fail. Local banks are instructed to flag and block these outgoing transfers to preserve national capital. Pushing the issue with your bank only leads to wasted time, funds frozen in administrative limbo, and unnecessary scrutiny on your accounts. This decision flowchart outlines the actual pathways available to you. As we established, the direct bank wire route hits a dead end almost immediately. To bypass the block, third-party e-wallets like Skrill or Neteller serve as the necessary bridge. You fund the e-wallet locally and then use that digital balance to instantly deposit into your international brokerage account. For highly technical traders, peer-to-peer crypto networks offer another route around the traditional banking system entirely, though they require a deep understanding of stablecoin mechanics and platform security. Using e-wallets requires a trade-off. You have to manage additional third-party accounts, and you have to account for the intermediary transfer fees on your deposits and withdrawals. This is the cost of doing business. Mastering these intermediary funding bridges is a mandatory survival skill for trading from Algeria. Once you know how to move your money, the second test is figuring out where to safely put it. You need a secure vault for your capital.
The internet is full of unregulated offshore brokers promising guaranteed returns. These are traps designed to snap shut the moment your deposit clears. The very nature of the Algerian gray market makes citizens prime targets for these aggressive scams. Your only viable defense mechanism is to exclusively vet and select brokers holding Tier 1 international regulation. If you send your e-wallet funds to an unregulated offshore entity, you assume a total risk of capital loss. When they refuse your withdrawal, you have no legal recourse. A Tier 1 regulated broker, however, is legally mandated to hold your money in segregated bank accounts, keeping it entirely separate from the broker's own operational funds. A Tier 1 license means oversight by the world's strictest financial authorities, like the FCA in the UK, ASIC in Australia, or CISEC in Cyprus. You verify this by checking the license numbers in the footer of the broker's website against the regulator's official public register. Because you cannot rely on the local government for a bailout, a broker's international license is the only security detail your capital has. The final logistical test applies to a large demographic in Algeria, the faith-conscious trader who must navigate the global markets without compromising their religious principles. A standard brokerage account charges overnight rollover fees for holding a position past the daily close. These fees generate interest, or riba, which is strictly prohibited under Sharia law. Beyond avoiding interest, true halal trading requires eliminating excessive uncertainty, known as gharar, and gambling, or miser. You achieve this by basing every trade on disciplined technical and fundamental analysis, rather than pure speculation. To eliminate riba, you must utilize a specific structural solution, the Islamic, or swap-free account. Selecting a standard account forces an ethical compromise the moment a trade is held overnight. An Islamic account removes the code for overnight interest, providing an ethical pathway to the global markets. Brokers still need to cover their costs for holding these positions. The financial trade-off is that a swap-free account often comes with slightly wider spreads or flat administrative fees. This is a permissible alternative to interest. Maintaining ethical integrity in the market requires actively demanding specialized account infrastructure from your broker, rather than just passively avoiding bad trades. Funding workarounds, verifying licenses, managing account structures. We have to ask, who is actually suited to survive in this environment? This chart evaluates your success based on logistical work. In the bottom left, demanding simple local funding and refusing license checks, you'll be blocked or scammed. The successful trader in the top right treats these hurdles as a rigorous business checklist. They take the time to master e-wallets. They relentlessly verify Tier 1 licenses on official registries, and they demand strict halal account structures to align their capital with their principles. The FXNX ecosystem is built specifically for the trader in that top right quadrant. We provide a fully regulated environment that actively supports Algerian-friendly e-wallets, backed by strict Sharia-compliant account infrastructure. Stop waiting for local regulations to map the route for you. Take complete responsibility for your own due diligence, build your funding bridge, and participate in the global financial markets on your own terms.